Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. The 14-month-old Congress-JDS coalition government in Karnataka collapsed last evening after Chief Minister H.D. Kumaraswamy lost the trust vote, securing 99 votes compared to BJP's 105. The International Monetary Fund has cut India's GDP growth forecast for 2019 to 7% and 7.2% for 2020, citing weaker than expected demand. It has, however, maintained that India will remain the fastest growing economy in the world. Hindustan Unilever's first quarter earnings surpassed analyst estimates on most fronts. Volume growth, however, was at a 7-quarter low of 5%. Infrastructure major Larsen & Toubro maintained its revenue growth and order inflow forecast despite missing analyst estimates in the first quarter. And Boris Johnson will succeed Theresa May as the new British Prime Minister after being elected the new leader of the Conservative Party in the UK. It was a positive day of trade for the US equity markets after a slew of strong corporate earnings and some progress being made in the trade negotiations between the US and China. Technology shares that led the gains at the start of the week for the top laggards. Renita Young of Bloomberg News tells you what happened in Tuesday's Wall Street session in this report.
U.S. markets ended higher on Tuesday as the S&P 500 inched back above that 3,000 level, all as the United States and China seem to be having more progress on trade talks, and U.S. companies continue to report earnings, with Coca-Cola being the first to report during the day, reporting better than expected earnings, shares rising to a new record as a result. And just after the bell, we saw Visa come in on better than expected earnings as well. Lockheed Martin and United Technologies also reported during the session better than expected earnings, shares rising on that news. And Whirlpool, however, did tumble just a little bit on disappointing earnings, but we do have more companies coming. Google parent Alphabet, as well as McDonald's and Amazon.com will come up later this week. Meanwhile, treasuries fell during the session and oil stabilized. It was rising for the past couple of sessions on tension in the Persian Gulf, and the U.S. dollar rose versus major currency competitors. And that's a look at your Tuesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
Let's take a look at the Asian markets now. Sophie Kamruddin is joining us live from the Bloomberg studios in Hong Kong. Good morning, Sophie. What are the cues you're picking up today?
Well, good morning. Regional benchmarks are mostly higher in Asia, with Australia and Hong Kong leading these modest gains. In Sydney, the ASX 200 is extending its rise while the Aussie dollar is falling, with bond yields after Westpac brought forward its RBA easing forecast by 1 month to October and is predicting another rate cut in February to bring the cash rate to 50 basis points by then. Now, elsewhere in the currency space, the yen is looking steady after a 3-day drop as the US dollar is hovering around a 2-week high ahead of Thursday's ECB meeting. Now, Japanese stocks are gaining ground, with electronics and automakers among the biggest boosts in Tokyo. The Kospi, however, looking little changed this morning amid trade and earnings very much top of mind for investors. LG Display, for example, falling after posting a wider than forecast net loss in the second quarter due to softer demand for flat screen panels. Now, over in Shanghai, stocks are opening higher, 0.5% for the index amid some optimism over the anticipated resumption of high-level U.S.-China talks, which are to take place next week. Back to you.
Thanks so much for that, Sophie. Now, one of the big updates from Europe, in fact, one of the key faces of the Brexit campaign, Boris Johnson, was elected as the next British Prime Minister, defeating his closest rival, Jeremy Hunt, by a landslide to win the Conservative Party ballot. He is now tasked with leading the country out of the European Union within 100 days before the 31st of October deadline this year. Jody Schneider of Bloomberg News brings you more.
Even though he's saying he's delivering Brexit on October 31st, and that was his game plan all along, that's what he ran on, there's still all the issues that made it so hard for Theresa May to deliver Brexit. None of that has changed. The EU is saying they have to go by October 31st, that they're not going to extend that deadline. He's saying that he will go then, but he's not saying how he's going to do that, what's going to change, how he's going to get this through Parliament parliament. So it's not going to be easy. Right now, there's lots of good feeling within the party about him, but how they make this happen is going to be his really tough task over the next few months.
Yeah, well, nothing looks particularly easy for the road ahead for Boris Johnson, even just making his new appointments. What are the difficulties there?
Yeah, so he has said that he has told plenty of people who backed him that he would give them roles. He also wants to give ministerial roles to more women and ethnic minorities, and he only has so many roles to give. He will have the exchequer job, he'll have a foreign job, he'll have some jobs to give out, but it won't be enough to make all the people who supported him happy. So he's going to start with some disappointing news to some people that he needs in his camp.
All right, let's talk about the other major international news. US and China will begin face-to-face trade talks next week. Trade Representative Robert Lighthizer will be traveling to Beijing next week, where a whole host of issues will be discussed, including Huawei and agricultural purchases. Selena Wang of Bloomberg News brings you the latest.
There has been some positive sentiment on both sides leading up to this. We had reports that Chinese are considering buying more U.S. agricultural purchases and are asking for exemptions from the Chinese retaliatory tariffs. But again, we are hearing U.S. officials really downplay the prospects of a quick deal, including Wilbur Ross saying that it's unclear just how long it's going to take to reach a deal. And sources have told Bloomberg that the meeting is expected to feature wide-ranging discussions on where things stand rather than real engagement on substantive issues. What we're hearing that talks thus far have really focused on Huawei and agricultural purchases while lacking discussion on these bigger structural issues. Again, big disagreements still stand right now, including Washington wanting structural changes to Beijing's economy, as well as issues around the removal of existing tariffs. We're also hearing that this is the first time that China's Commerce Minister Zhong Sun will be joining the talks. We've been told that he is more of a hawkish member and that his presence there will make sure that the more hawkish side of the Chinese negotiations are heard.
One of the major issues, of course, has been Huawei. How's discussions over the Chinese telecommunications giant going to play into discussions?
Huawei is already playing quite heavily into the discussions, and there have been reports that if restrictions are eased up on Huawei, that this may mean China will purchase more agricultural goods. Trump and senior White House officials did recently meet with top CEOs of big tech companies, including Cisco, Intel, Micron, and Qualcomm. This was really seen as a step of easing restrictions on Huawei. These companies have been arguing that banning them from Huawei is actually more hurtful than helpful to national security. They're making the argument that some of the components that they supply to Huawei can be easily found from suppliers elsewhere, and that by cutting them off from this revenue, that's hurting their ability to invest in critical research and development to maintain the U.S.'s lead in the semiconductor industry. But again, even if these licenses are doled out quickly to these U.S. companies, this isn't a quick resolution. Trump is already facing backlash from Congress on the easing up of restrictions, and China isn't satisfied with just the resumption of licenses. They want Huawei removed completely from this blacklist.
So no easy solutions there. We'll have to watch the space for everything that emerges next week. Let's talk about the Indian markets now. Agam Vakil is here to tell you all about the day's trade and what's happening in the futures and options space. Agam, how are we looking today? Late sell-off yesterday that changed the picture entirely. What are we looking like at the start of trade today?
Yeah, Alex, so it would be the fourth straight day, if I'm not mistaken, for the benchmarks to come off quite substantially in an expiry week. And we spoke about fund flows. I'm going to address them too. There's some concerns coming in through. But let me start off with the SGX Nifty. And as usual, it's not really giving us any cue as to how we can start because it is flat right now. But when it comes to our own markets yesterday, well, marginally in the red, yes, sure, we are looking at some, but we have to understand that there's a lot of movement in the broader markets, which explains the small cap and mid cap indices, which have had a little bit of a divergent day. But moving on to your banking indices, your PSU banking index this time. So day before, it was weakness in the private sector banks, and yesterday it was the public sector banks which did see a lot of weakness, indicated by the 3% decline in that index. But moving on to your ADRs, again, marginal cues coming in. We don't really have too much going in for any of these stocks listed abroad, except for Dr. Reddy's and HDFC Bank, which have declined by around 2.5%. But moving on to your fund flows, and this is what I'm talking about. The fund flow number has increased every single day over the past 5 days, and the outflow this time stands at around 2,600 crores for FIIs, but DIs have bought to the same tune. So DIs are coming in and buying out, whatever FIIs are selling. But, the fact that FIIs are moving out does show that they are losing confidence in the markets, Indian markets at this point in time. Moving on to your contributors. Again, the gains in ITC and Kotak Mahindra Bank were cancelled out by the HDFC twins in SPI. Let's take a look at the futures and options market then. And again, it is expiry, 44% rollovers are not very confident, but naturally, considering the kind of weakness, we will have a lot of traders hesitant to carry over their positions into the next series. That said, the Bank Nifty futures, again, the picture isn't very different. 42%, 2 days left for expiry, or rather 2 sessions. Let's move on and talk about other factors then. And for now, we do have that 11,300 put cementing itself as the one with the maximum open interest, and this may come and serve as a little bit of a relief, if not much, considering the kind of accumulation that we've seen in 11,300, which also means that it will be hard for traders or the markets to take out 11,300 on the Nifty in today and tomorrow. But beyond that, it's anyone's guess. But I'm talking about the Nifty's, this expiry specifically. We saw a little more writing around the 11,400, 11,500 calls too. Let's move on and talk about other factors. Further up move of the India VIX, again on expected lines, considering the kind of volatility that we've seen at around 13.4, and the Nifty put call ratio remains at a neutral level of 1. Moving on, when it comes to stocks which have moved out of the band, we have Dish TV and Reliance Infra. And as far as your other stocks are concerned, Lupin, Cipla, CESC, among others, of course, naturally seeing a lot of unwinding because it is expiry. So we'll be watching out for these stocks as well. And of course, Larsen & Toubro, Z Entertainment, and Hindustan Unilever on the back of earnings.
Absolutely. We're going to talk about that right now in just a short bit. Thanks so much for that, Agam. Let's first take a look at the network headlines. Selena Wang is back to tell you about all of those.
David, big tech faces more investigation with the U.S. Justice Department looking at whether companies are harming competition. The Antitrust Division will address concerns that consumers and businesses have expressed about search, social media, and online retail. It's the latest sign of official scrutiny by Washington. Facebook, Amazon, and Google parent Alphabet all fell in extended trading. British business is warning incoming Prime Minister Boris Johnson that he must avoid crashing out of the European Union without a deal. Johnson will enter 10 Downing Street, having reiterated his pledge to leave the EU by the end of October, whether or not an agreement is in place. However, the Confederation of British Industry says that would be hugely worrying and threatens investment in jobs. The Bank of Japan is likely to lower its inflation forecast for the year and may also downgrade some of its growth projections when policymakers meet next week. The bank will probably cut its inflation outlook to 1.1% for the year through March to reflect sluggish price growth and the impact of lower mobile phone charges. Growth forecasts may be reined in due to global uncertainties. Reports from Reuters say Iran will secure the Strait of Hormuz to prevent what it calls disturbances to oil shipping. The report cites comments made by Iran's deputy foreign minister, who's on an official visit to Paris. The U.S. has a battle group in the region and has claimed Iran is behind apparent attacks on vessels near the strait. The waterway accounts for almost half of global oil shipping. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Selena Wang. This is Bloomberg.
Let's turn to earnings now. Larsen & Toubro reported a 21% growth in profit in the first quarter and an order inflow of over 38,000 crore rupees. But the numbers were operationally weak, with margins in most verticals coming under pressure. Darshan Mehta is here to tell you about all of that, the key numbers. Darshan, glass half full, glass half empty, because the outlook they've maintained on the order book and on revenues, right?
Yeah, usually they don't change it in the first quarter. Usually in the second or the third quarter, they tend to change it. So on the guidance, I'm not too concerned. Overall, operationally, yes, the numbers were weak. The revenues came in below, the profit came in below, and even the EBITDA came in below just because of the adjustment. It's a factor. The EBITDA margin looks elevated, but nevertheless, operationally, the number is weak from L&T. The other part is that they also submitted, they have actually hived off the electrical and automation business into post the sale. So they've also given profit from continuing operation, which also is not seeing tremendous growth at this point of time. The silver lining is the order bagged. They bagged orders worth almost 38,700 crores during the quarter. The anticipation was close to 32,000 crores. So they have done slightly better than what was there in an election year. So that is good for them. But the other factor is that higher other income aided the financials. This time around, the raw material cost was much higher. That dented the performance of the company. That dented the margins. Working capital has actually deteriorated slightly. Higher finance cost has dented the profit for the company. Mindtree numbers are not included. Probably they will be included in the second quarter. Overall, if you take a look at the verticals itself, the infra margins are weak, which is a big concern for the company at this point of time. They have come in much lower. Power, development and other segments saw a revenue decline, and majority of the segments we've seen has seen a bit of margin pressure that's come in. The guidance has been maintained, but the commentary wasn't the strong, because what their management has said that the private capex has not picked up. They're seeing subdued private sector growth at least for the next 1.5 years. So there is issue there in terms of what the outlook is.
Thanks, Darshan. Key stock to watch out for in trade today. Hindustan Unilever also reported numbers yesterday. Strong quarter with most of its parameters either surpassing or meeting analyst estimates. Volume growth, however, remained at 5%, which was at a 7-quarter low. Agam Vakil is here to tell you about the quarter gone by. Agam, the key numbers were all intact, but then HUL again was one of the first to talk about that consumption slowdown, right?
Yeah, you know, Alex, when we talk about numbers being intact, the numbers were largely in line with expectations. So, I mean, I wouldn't exactly call this or put this as a blockbuster quarter because of the fact that it's met expectations. When it comes to revenues, they have risen around 7%, in line with what we were working with. Your margins have expanded to 26.2%, but there is also another technicality on Ind AS that comes into place. So if you actually, bring in the Ind AS, adjust the margins for the leases under Ind AS 116, the margins have expanded by only 150 basis points. And again, that would be very much in line with our expectations. Net profits did rise about 15%, slightly ahead of expectations. Now, coming down to the all-important number, volumes. That stood at around 5%. Well, there were at least 5 analysts on the street who were expecting volumes growth to come in at 6%. So it's not much of a disappointment there. But that said, it is also the lowest volumes in 7 quarters. And for the second straight quarter, we've seen HUL come in single digit. That said, it was also coming on the back of the fact that it's a high base of 12% in the same quarter last year. And of course, gross margins have remained flat. The management has said that the input cost environment remains benign, and on the whole, they have also seen raw material costs decline by around 6.5%. That explains why they did take some price cuts in certain products as well. And moving on to your most important factors, in this case, home care segment has risen and seen a growth around 10%, in line with what we were working with. But personal care, which contributes nearly 45% of overall revenues, that has seen a growth of only 4%, as against our expectations of 7 to 8%. So there was a little bit of disappointment there. So on the whole, numbers largely in line, and save for perhaps the profitability, there has been a little bit of a miss here and there. Well, I would say it's a quiet quarter, steady quarter for HUL.
All right. Well, thanks so much for that, Agam. Let's stick with earnings now. Bharti Infratel is likely to see a subdued quarter this time around, with most of its key metrics likely to remain flat compared to last year. However, it is likely to see a rise in its tenancy ratio. Samit Sarkar is here to take you through the key expectations. Some of the headline numbers first. Good morning.
Good morning, Alex. Now, if you see the company's revenue, that is expected to be marginally lower by nearly 0.6% to close to 3,600 crore rupees. The company's EBITDA is expected to fall by nearly 5% to close to 1,400 crore rupees. Margins are expected to come in at 40%, while the net profit is expected to be lower by nearly 2% to close to 594 crore rupees. Now, tenancy ratio, which tells you the number of operators that are present in your towers, that is expected to increase marginally to 1.96 times from 1.88 times. However, on the revenue front, it is expected to be hit because of the past tenancy exits that the company has seen, which will also impact the company's overall rental revenues. However, some of these negatives will be offset by higher rentals that the company has been charging now because of the exits that we had seen. Now, the total tenancy is expected to decline for the company because of further cancellations by Vodafone Idea. On the energy side, if you see the energy reimbursements that are expected to increase due to seasonality factor that comes in the first quarter of financial year 2020. In this quarter also, the company is expected to realize nearly 90 crore rupees from tenancy cancellations, which will be booked in the company's revenue. So we'll have to watch out for that fact. If this number is higher than the overall numbers could well come in ahead of the analyst expectations. Now, the key things to watch out for from Bharti Infratel earnings will be management commentary on the Indus Tower merger completion, tenancy additions, additional exit penalties booked by the company, and any update on inorganic or organic ways of fiber rollout would be important to watch out for from Bharti Infratel earnings today.
Thanks so much for that. Well, talking about Asian Paints, in a seasonally weak quarter for Asian Paints, adverse product mix may result in a lower bottom line and margins. Yash Upadhyay is here to tell you about the street expectations from the paint maker.
Asian Paints will be coming out with its Q1 numbers today, and it is expected to be a largely stable quarter for the company. Now, mind you that the first quarter, as a percentage of the overall revenues for the company on a full year basis, contributes the lowest. So it's a seasonally weak quarter for the company. But coming straight to the headline numbers, their revenues for the quarter are expected to grow by about 11% on a year-on-year basis to 4,886 crores. EBITDA is seen at about 906 crores, while margins could be seen coming off to 18.5% versus nearly 20% in the same quarter last year, along with net profit too being marginally lower at around 550 crores versus 558. Now, among the key factors to watch out for is the volume growth in the domestic decorative paints business. Now, most of the brokerages, they are of the opinion that the volume growth number would be in the range of high single digit to early double digits, so anywhere in the range of 8 to 10%, with some of the brokerages even indicating a number which could be in excess of 11% or even 12% for that matter. Now, coming to the margins, the raw material situation that seems to have moderated on a quarter-on-quarter basis, with crude oil prices too coming off from the peak. However, that benefit would not be translating into the margins because of the fact that we have seen higher sales of putty as well as distempers in the quarter gone by. So because of this of that adverse product mix, the margins could be coming in lower as well. However, to some extent, it would be covered up by the price hikes that the company had announced in the quarter gone by, which are in the range of around 3 to 4%. So that is as far as the margins are concerned. But on the other hand, we would be watching out for management commentary with respect to the demand outlook, along with any update with respect to the performance and outlook on the industrial paint business. That is where the company gets the revenues. It doesn't contribute a whole lot when it compared to Kansai and Nerolac, but with the kind of trend that we've seen in the auto space, it could be that the industrial paint business could come under some amount of pressure. So we'll be watching out for that, as well as any trends with respect to market share. There are two new plants, Mysuru and Vizag. They too have come on stream, and some other expenses with respect to that could keep the net profit down. But we'll be watching out for all of these factors when Asian Paints comes out with their numbers.
All right, so a lot of earnings to digest today in the session that's coming up. But Samit Sarkar is here to tell you all about the other stocks that are in the news. Good morning. I mean, I've already said that. Samit, what are the stocks that you're watching for?
Well, good morning again, Alex. Now, in stocks and news, also we have a lot of earnings that we need to watch out for. Firstly, I'll start off with Z Entertainment. Now, the company numbers were ahead of the analyst estimates, with the revenue coming in up by nearly 13% to close to 2,000 crore rupees. The company's EBITDA jumped nearly 34% to close to 727 crore rupees, while the margins expanded to 36.2%. Now, a robust growth was seen in domestic subscription revenues, but the ad revenues remained weak for the company. Now, second on the list is Mahindra & Mahindra Financial, which reported a weak set of numbers, with though the company's net interest income was higher by nearly 16.5%. Its net profit plunged by nearly 75% to close to 68 crore rupees. Now, this is on a standalone basis, and this was because of higher provisionings done by the company in the first quarter of financial year 2020. Now, the company's gross NPA also moved higher to 7.4% versus 5.9% that the company reported in the last quarter. Third on the list is Torrent Pharma. Now, the company has reported largely inline set of numbers. The company's revenues were higher by nearly 8% to close to 2,000 crore rupees. EBITDA jumped by nearly 13%, while the margins came in higher at close to 26.8%, which was on account of better geographical mix. Fourth on the list is NIT Technologies. Now, the company's number were a mixed set, because if you see the company's revenue that were ahead of the analyst estimates, but the margins and the net profit were below analyst estimates. Now, the revenues were down by nearly 1% to close to 963 crore rupees, but the company's EBIT margins came in way lower at around 9.9%, and that was because of wage hikes and visa costs that the company had booked in the first quarter. Fifth on the list is SBI Life. Now, the company reported a strong set of numbers, with gross premium rising nearly 41% to close to 6,700 crore rupees, while the net profit increasing by nearly 5% to close to 372 crore rupees. Also, the company has seen a strong growth in all its operating metrics like protection mix, persistency ratio, cost ratio. All key operating metrics have seen some positive improvement. The couple of stocks that we also need to watch out for other than earnings will be, firstly, it will be Bosch. Now, the company has suspended all manufacturing operations in its Karnataka plant for July 27th and on July 29th. Now, this move is in order to adjust the production to meet the demand of these products and to avoid unnecessary inventory buildup. That is what the management has said in the release. Now, second, we also need to watch out for Bajaj Electricals. Now, the ICRA has downgraded the company's credit ratings by one notch due to increasing leverage levels and because of weakness seen in its debt coverage metrics. Now, the long-term line of credit and the non-convertible debentures of the companies, now these ratings have been downgraded to A from A+, while the short-term line of credit and commercial paper ratings have been downgraded to A1 plus A1 from A1+.
Thanks so much for that, Samit. Now, let's turn to politics. After nearly 2 weeks of drama, allegations of MLA poaching, MLAs that went into hiding, and a slew of other allegations and counter-allegations, the 14-month-old H.D. Kumaraswamy government in Karnataka lost the trust vote on the floor of the House. The Congress-JDS coalition secured 99 votes compared to 105 won by the BJP. Now, while the Congress alleges that the rebel MLAs were bought by the BJP says that the government had no mandate whatsoever to begin with. Kaushik Vaidya spoke to Brijesh Kalapa of the Congress and Rajiv Chandrasekharan of the BJP, and this is what they had to say.
There were 3 JDS MLAs in that entire lot. But now I don't think is a time to apportion blame, and I don't think it's appropriate now to say that they were wrong and we were wrong. Anyway, obviously the coalition had been destabilized by sheer money power, and I think the blame ought to be rightly placed on the sheer strength of the money power which the BJP had employed. So let's look forward instead of backward.
All right. In the immediate future, then, what is the party's position on the rebels right now? Will the party's whip ask for a disqualification?
We have already asked for a disqualification.
Okay.
Now it's for the speaker to take a decision either way.
All right. So I asked this because I'm laying out a scenario for you here. If you choose to take no action and they're allowed to come back with a message saying, fine, you had problems with some of us, but it's not like you like them much either. So you come back and vote no in the next confidence motion that the BJP will face as well, which will allow that government to also fall short of the halfway mark. Is that a possibility at all?
No. They have crossed sides and they're going to be accommodated as ministers by the BJP. I don't think anybody sees that happening. They've been purchased.
JDS got about 35 MLAs elected, and it was clear that both those parties didn't have a mandate. We had come closest to it, were short of the majority by a few seats. And it was clear that the people wanted those two parties out. But they came into this opportunistic alliance and have made the last 14 months a clear global demonstration of what an opportunistic alliance looks like, which is, really about looting and malgovernance and very little of actual governance and development. So that has come to a close as we had predicted, that these things which are sort of bound together by opportunism rather than a clear development ideology will have these very rapid sunsets, and that is the sunset that we see today.
All right. Yes, agreed. This was a government that was riddled with contradiction, but it's not that the BJP did not try to give it a push or two over the edge in the last 14 months, right?
Look, you must understand that, when we are elected to serve the people, and you have in full view of the people of Karnataka, a government that is doing absolutely nothing. It is not for us to sit around and just play a violin or play a musical instrument. It is clearly incumbent on us to do what is right by the people of Karnataka, which was to help get rid of this government. And it's the MLAs that have spoken, and we see the result today in the vote of confidence that the Chief Minister himself moved.
To talk about some of the stories that you'll find on the website bloombergquint.com. First up, the International Monetary Fund has cut India's GDP growth forecast to 7% for 2019 and 7.2% for 2020, reflecting a weaker than expected outlook for demand. India, however, will still be one of the fastest, or rather the fastest growing major economy in the world, and much ahead of China, according to the IMF. The Securities and Exchange Board of India has sought more disclosures from Hotel Leela Venture before it seeks shareholder approval for a sale of assets to Brookfield Asset Management, delaying a deal that would have helped the company pay debt. That's all you need to know going into trade today. Do stay tuned. There's a lot to talk about today. So there's a lot more coming up in just a short while. This is Bloomberg Quint.